Welcome to The Explainer. Today, we're talking about AppFolio. They just dropped an earnings report that was so good, so powerful, that the stock shot up almost 20% in a single day. So, what's going on here? Let's break it all down.
All right, first up, that huge 19% pop. You have to understand, a stock doesn't just move like this for no reason. Something big went down. Yeah, just look at that number, 19.4% in one day. We're not talking about a slow climb. This was a rocket ship. It tells you that Wall Street basically woke up and decided in the space of just a few hours that they had been undervaluing this company. Big time.
So that's the million-dollar question, right? What on earth did AppFolio say to get investors so fired up and send the stock soaring?
And the answer? It's something Wall Street absolutely loves to see. It's the classic beat and raise. It's a simple but incredibly powerful 1-2 punch that gets investors very excited. Okay, so let's look at the beat part first. And they didn't just kind of sneak by the numbers, they crushed them. You can see here, earnings per share came in at $1.38 versus the $1.27 everyone was looking for. That's a huge beat. And revenue? Same story. Came in higher than expected, growing at a really strong 19% year over year. This is a company that is just firing on all cylinders.
So beating expectations is great, but that's only half the story. This is the raise. Management came out and said, you know that great quarter we just had? Well, get used to it. They bumped up their revenue outlook for the entire year and held their margin guidance steady, which is super strong. It's basically them telling the market, this wasn't a one-off. This is the new normal.
Okay, so how are they pulling this off? Well, it all comes down to their core strategy. And it's a smart one. They're not just focused on getting more and more customers, they're figuring out how to get a lot more revenue from the customers they've already got. And this chart right here, this tells the whole story. Look at this. Unit growth, so the number of properties using their software, is up a solid 6%. That's good. But revenue growth, it's up 19%. That's more than 3 times faster. That big gap between those two bars, well, that's where all the magic is happening. This whole idea is what we call monetization depth. It's a fancy way of saying they're increasing how much money they make from each customer, what analysts call ARPU. And honestly, this is a sign of a really healthy software business. It means your platform is so sticky and so valuable that you can keep adding new services that people will actually pay for.
And they're doing this in 3 really clear ways. First, they're getting customers to upgrade to their more expensive Plus and Max plans. Simple enough. Second, they're pushing these value-added services, things like payments and screening tools that are just essential. And third, they're building out this whole AppFolio Stack ecosystem, a marketplace with 80 partners. So AppFolio becomes the absolute center of their customers' universe.
Okay, so if monetization is the engine, AI is the high-octane fuel making it run. This is the other huge piece of the puzzle. AppFolio's investment in AI isn't just a gimmick, it's becoming a real competitive advantage, a moat, if you will.
And just look at this adoption. It's incredible. 96% of their customers have used one of their AI tools this year. That is insane. It tells you this isn't some beta feature they're testing out on a few people. AI is completely integrated into the core product for pretty much everyone. And it's not AI for AI's sake. It actually works. The CEO, Shane Trigg, pointed this out on the call. He said customers using their new AI workflow are collecting rent 56% faster. Just think about that. For a property manager, cash flow is everything. This is a direct line from software to more money in the bank faster. That's a true game changer. So their whole AI platform is called Realm X. And the key word here is AI native. This is so important. They didn't just, buy some AI tool and plug it in. They built their entire system from the ground up with AI at its core. This lets them do some really cool stuff, like create these performers. Think of them as AI assistants that can handle an entire workflow, like the whole leasing process, from start to finish. That's a huge step up from what competitors are doing. All right, so fantastic quarter. But what's next? What does this all mean going forward? That's our job as analysts, to figure out what to watch for now.
We've got our eyes on a few key things coming up. Obviously, the next earnings report in Q3. They set a high bar for themselves, so now we'll see if they can clear it. Then you've got their customer conference in October. That's often where they unveil new stuff. And of course, we're just going to keep watching that Realm X adoption. Is it still growing? Is it leading to more revenue?
So here's our official take from us here at Talk Tickers. When you put it all together, the strong quarter, the smart strategy, that AI moat, we're initiating our coverage with an outperform rating. Simple as that.
Going into next quarter, we'll be watching margins and what we call the AI attach rate. Basically, are they turning all those AI users into paying customers for other services? Given everything we've seen, we think the momentum continues.
And of course, we have to say it, this is all just for your information. It is definitely not financial advice.